This is Ruchakayo. Welcome to my YouTube channel. Basically, I'm going to teach about how to read candlesticks and the reason why we use candlesticks in the chart or in the forex market. Okay, we use candlesticks because they help us to show where the market is going to move. Basically, they show us the move or where the market is going to move. Okay, so as you see, my candles are in red, and then my bullish candles are in red. Then my bearish candles are in red. Then the bullish candles are in green. Okay, I think I'm clear about that. The bullish candles are in green. Then the bearish candles are in red. Okay, if you see a red candle on my chart, it is a bearish candle. Okay, so let's start with this one. As you see, the open price, it is here. Open price is this side down. The market moved this side up, then it closed here. As you see, this is the candlestick body. Then the bullish candle, this is the bullish candle. Then this is a bearish candle. It opened here, it moved this side down, then it closed here. Okay, this is the lower wick, this is the upper wick or the high of the candle. This is the high of the candle or the higher wick. This is the lower wick. Okay, upper wick, lower wick. This is the candlestick body. Okay, as you understand. So I'm going to teach about examples of candlesticks, as you see, and more which are down there. Okay, so I'm going to go one by one candlesticks, and I'm also going to give examples of this. We have the Doge candlestick or the Doge candlesticks. In the Doge candlesticks, we have the examples of Doge candlesticks, which is the neutral doji, the long leg doji, and the dragonfly doji candlestick, and then the gravestone doji candlestick. So this neutral doji, how does it work, and why is it like this? Okay, it is like this because it opened here, it opened here in the middle. It moved this side up, then it came back in the middle, and then it moved also down, then it came back in the middle again. It closed here in the middle. Okay, that's why it is called a neutral doji, or that's why it's called a doji candlestick. Neutral. Okay, it is like a plus sign. Okay, then the long leg doji, it opened here in the middle. It went up so long, or it went up for some time, then it came back into the middle, then it went down a bit also for a long time, then it came back in the middle. So this one, the difference between the long leg doji and the neutral doji, the long leg doji has higher wicks, and then the neutral doji has smaller wicks or the shorter wicks. So let's go on this one. It's called the gravestone doji candlestick. It is mostly used in supply and demand and price action trading. Gravestone candlestick shows us that the market is likely to go in a bearish direction. As you see, it is a red candle. And then this is a bullish candlestick, which it is a bullish doji candlestick. It is called the dragonfly. It represents that the market is likely to go bullish. Okay, because it is green, and because it opened here, it went this side down, and then it came back and closed at the top. It means that the buyers are so strong that also they pushed this candle that was going bearish, and then it became into doji candlestick or a dragonfly doji candlestick. Okay, so let me go to the next ones. These are examples of candlesticks that we use in the market. They are mostly used in supply and demand, and in price action. Okay, let's carry why this sorry, bring it back to be here like this. So this is the engulfing bar. the bearish engulfing bar. It represents that the market, as you know, as I told you, this is the green candles that they are the bullish candlesticks. Okay, this candle moved this side up, then it closed here, and then this one opened here, and then engulfed this first candle, and then it closed this side down. Okay, making it an engulfing bar. Okay, how do we mark it in supply and demand and price action? We mark it like this to become our supply zone, because this is a bearish engulfing bar. It will work as our supply zone. Okay, that's how we mark it in price action and supply and demand. Okay, this is a bullish engulfing bar. It opened here, this candle opened here, then it went this side down, then closed here, then this next candle opened here, then it moved all the way up here, and then it closed here. Okay, making it a bullish engulfing bar. Okay, so we mark it like this. If we are in supply and demand or price action, like this, the upper wick and the lower wick of the first candle, that's what we mark. Okay, to become our demand zone. Okay, let me go to the next one. Yeah, please subscribe if you love this work. Okay, and pass and subscribe. Then dark cloud cover pattern. So this one is quite disturbing, but you understand it slowly but slowly. Okay, this candle opened this side down, it moved up to here, it closed here. As you see here, this is 50% of real body. This is where they marked. Okay, so when it closed here at the top, this second candle opened, or the bearish candlestick opened from here, then it moved this side up to, and then it moved like 50% of this first candle. It moved 50%, or it moved above 50%, like in the 70% of this first candle, then it goes here, making it a dark cloud cover pattern. Okay, yeah, or closed below 50% of the real body of this first candle. This is the opening price, then this is the closing price. Okay, this is the opening price of this one, this is the closing price of this one. That's what is called the dark cloud cover pattern. We go to the next one. We are out of time. The inside bar patterns, or the Halami pattern. Okay, how do we use this? The bullish inside bar, this is the first one that they are showing us here. This is the mother bar, as you are seeing. This is the inside bar. Okay, so how do we use them in supply and demand, and how are they useful? Okay, so for this mother bar, this one, it opened here, then it moved this side up, this side down, it closed here. Okay, then here for this one, it opened here, then it moved this side until here, making it the inside bar, or the candle that failed to engulf this second candle, because this one was trying to move this like here and this here. Okay, yeah, this is the inside bar which failed to engulf this first candle, making it an inside bar, this inside bar. So if we are marking this in supply and demand, we mark it like this, price action, mark it like that. Sorry, let me not enter this one. Mark it like that, demand zone. Okay, and for this one, so let me go to this one, bearish inside bar. This one is the same as this one. This is the bearish engulfing bar. Okay, the same. So for this one, this is the mother bar. It opened here, then it moved this side up, closed here, and then this one opened here, and then failed to engulf this first candle. okay, making it an inside bar. Okay, for this one, it is mostly used in supply and demand price action. We mark it like this from the upper wick to the lower wick, like this. That is going to be our supply zone. Okay, minimum this. So what will be our next candlestick to read about? To be the morning star. Before I go further, please subscribe. If this is the morning star, bearish candlestick, bullish candlestick. So how does the morning star help us? Okay, this is for this one. It works mostly for these two, morning star and then the evening star. They work mostly on the swing highs and the swing lows of the chart. For the swing highs and the swing lows. Okay, I'm going to show you that. The morning star, for this one, this candle opened here, then it moved down like this. It is a bearish candle, as you see here. Then for this one, open here and then move this side up like this. Okay, it can be a bullish or a bearish candle. It doesn't matter which color, as long as it is a small candle. Okay, then for this one, it opened here, then it moved this side up. Okay, they can be equal, doesn't matter, or it has engulfed which one and which one. Okay, they can be, these two can be equal. What matters is that they have a smaller candle inside. That's what makes them a morning star. So how does this morning star help us? Mostly this morning star is more useful if you find it on the bottom or where the market is trying to change direction. Let me show you this. In areas like this, these bottoms, if you see a morning star on the lower time frame, because this is a 4 time frame, it will probably give you a confirmation of a buy. Okay, for this one, this is an engulfing bar, as I told you. One of them, this one. So this is an inside bar. This one, this line. For this one, it failed to engulf this one, becoming an inside bar. Okay, that's type of them. So for the morning star, it works mostly on the swing lows of the market. On the swing lows, as you see, I'm trying to mark to show you them. This, yeah, that. Then for the evening star is mostly used on the swing highs. Okay, it most works there in those areas. Okay, so it will work as your confirmation in such areas. We go back to the evening star to show you how it looks like. This is the evening star candlestick pattern. A smaller candle is always in the middle. It can be a bullish or a bearish, as long as you have a bullish candlestick that was made at first, then this bearish candlestick made at last. Okay, this mostly works on swing highs. Okay, so for you to learn forex in the best way, it's better when you get somewhere to write these things down. That will be the best thing to do. Okay.